So hi and greetings. We are from Group 5 from Group B. We'll be presenting our group project with the title of Financial Statement Analysis. This group project is conducted under the course Introduction to Financial Accounting with the course code BKAF 1023. Now I am going to introduce the members of Group 5. Group 5 consists of 5 members. The first member is Muhammad Anas, second is Muhammad Fahmi Arisham, the third member is me, Wan Muhammad Daniel Zainuddin, the fourth member is Ahmad Firdaus, and the fifth member is Lai Weishian. This is the table of content of our group project report. And these are the material points that will be delivered in this presentation. So the first content is the introduction of this group project report. The second part is the background of company. Our group have chosen two companies which are Telekom Malaysia Berhad, which is TM, and also Malaysia Airports Holdings Berhad, MAHB. The third content is the financial ratios definition, and the fourth section is the calculation of financial ratios. There are four types of financial ratios calculated in this financial statement analysis, which are liquidity ratio, activity ratio, profitability ratio, and also leverage ratio. The fifth content is the performance to improve suggestion, and the sixth part is the summary of this group project analysis. Now, I am going to present the introduction section of this group project. What are the purposes of this financial statement analysis? This report attempts to give a thorough analysis of Telekom Malaysia and Malaysia Airports Holdings Berhad's fiscal status for the year 2022 as part of our joint endeavor to obtain deeper insights into their financial performance and health. Why our group chooses TM and MAHB? The financial reports of these two companies were chosen to be evaluated because these companies have a great impact on the progress of the country, especially in terms of profits and the improvement of the national economy. The core financial statements such as the balance sheet, statement of financial position, and statement of cash flows are typically used to accomplish financial reporting, which is the dissemination of financial data to internal and external stakeholders. Our goal is to provide a concise and understandable summary that gives stakeholders the information that they need to make wise decisions. The financial complexities of Telekom Malaysia and Malaysia Airports Holdings Berhad will be examined along with trends, notable accomplishments, and also possible obstacles. Excellent financial reports are able to show a good reputation for a company, and the company has a potential to grow further with the increasing interest of investors to invest in their company. Several steps can be implemented to improve the process of preparing financial reports, including standardizing information collection and also keeping information and data organized.
The table content of number 2 is background of company. Our group have analyzed two companies, where is Telekom Malaysia and Malaysia Airport Holding Berhad. And the first company is Telekom Malaysia. Telekom Malaysia is a company that engulfs in the establishment, maintenance, and provision of telecommunication. Telekom Malaysia has founded in 1984, which began as the national telecommunication company, which provide largest broadband service, data, fixed line, and so on in Malaysia. While the second company that we analyze is Malaysia Airport Holding Berhad. Malaysia Airport Holding Berhad, is known as MAHB, where it's a holding company that was incorporated as public limited company in 1999 November, and was thereafter listed on the main board of the Kuala Lumpur Stock Exchange, Bursa Malaysia, has becoming the first airport operating to be listed in Asia and the sixth in the world. The main airport is the KYA, where is the main activity of KYA is including control air traffic management, baggage handling, passenger check-in, and flight information display. The table content for number 3 is financial ratio. There are different types of financial ratio where each serving its specific aim in analyzing different aspects of a company financial performance. There are four main financial ratio below it, and the first one is liquidity ratio. And liquidity ratio for the current ratio, where is the current asset divided by current liability. And the second liquidity of ratio is quick ratio. To find out the quick ratio, where is quick asset divided by current liabilities. And for the second financial ratio is activity ratio. To find out the total asset turnover, which is new net sales divided by average total asset. For the account receivable turnover, where is net sales divided by average total receivables. And number 3 and the third of financial ratio is profitability ratio. Profit margin on sale is net income divided by net sales. And the return of common shareholders' equity is net income preferred dividends divided by average common shareholders' equity. Number 4 financial ratio is leverage ratios. To find out the debts to asset ratio, it is total liabilities divided by total asset. And to find out the debts to equity ratio, which is total debts divided by total shareholders' equity. After that is the calculation of financial ratio. The first financial ratio is liquidity ratio, where its current ratio in 2022 between the two companies, where it's TM and MHB. TM get the current ratio where it's 1.17 times, and this indicate that for every one of current liabilities, the Telekom Malaysia Berhad has 1.17 of current asset as their backup, while MHB has 0.9 of quick asset as a backup. The correlation between the TM and MHB. TM has demonstrated a superior current ratio compared to MHB, that indicating a more favorable short-term liquidity position. The current ratio, which measures the capacity to cover immediate liabilities with available assets, is a critical indicator of financial health. With a higher current ratio, TM suggests a stronger capacity to meet its obligation, whether unforeseen financial challenge. And the second one is quick ratio in 2022 between BTM and MHB. Quick ratio for TM in 2022 is 1.12 times, while MHB in 2022 is 0.76 times. This indicates for every 1 ringgit of current liabilities, TM companies has 1.12 of quick asset as a backup, while the Malaysia Airport Holding Berhad has 0.76 ringgit Malaysia of quick asset as a backup. In summary, Telecom Malaysia Berhad exhibit a superior quick ratio compared to Malaysia Airport Holding Berhad, underscoring a more robust ability to meet short-term obligation without relying on the sales of inventory. The quick ratio, which excludes inventory from current asset, that provide a more stringent measure of liquidity ratio. TM has a higher quick ratio than Malaysia Airport Holding Berhad due to reason that implies a more efficient management of liquid asset. That's all for me.
Hello, my name is Anas Fidos Silanjut, number matrix 295594. So for the next analysis ratio, I will present activity ratio and profitability ratio for Telkom Malaysia Berhad and Malaysia Airlines Holding Berhad. So for the first component in activity ratio, which is total assets turnover, we can see that Telekom Malaysia Berhad total asset turnover is 0.53, which indicates Telekom Malaysia Berhad converted its assets to sales as much as 0.53 times, while for Malaysia Airlines Holding Berhad shows that their total assets turnover is 0.16, which indicates as much as 0.16 times Malaysia Airlines Holding Berhad can converted its assets to sales. So for the comparisons, Telekom Malaysia Berhad total assets turnover is greater than Malaysia Airlines Holding Berhad, which implies that Telekom Malaysia Berhad is more efficient in producing their sales from their assets. Next, the second component in activity ratio, which is account receivable turnover. For Telekom Malaysia Berhad, account receivable turnover is 5.55 times, which implies that Telekom Malaysia Berhad converted its account receivable to cash as much as 5.55 times per year. For Malaysia Airlines Holding Berhad, their account receivable turnover is 3.64 times, which indicates that Malaysia Airlines Holding Berhad converted its accounts receivable to cash as much as 3.64 times per year. So for the comparisons, Telekom Malaysia Berhad account receivable turnover is greater than Malaysia Airlines Holding Berhad, which indicates Telekom Malaysia Berhad is better in turning their account receivable to cash. Proceed to the next analysis ratio, which is profitability ratio. For the first component in profitability ratio, which is profit margin on sales, for Telekom Malaysia Berhad profit margin on sales, it shows that 9.44%, which indicates that Telekom Malaysia Berhad gained 9.44% incomes from their sales. Other than that, for Malaysia Airlines Holding Berhad, their profit margin on sales shows that 5.99%, which indicates Malaysia Airlines Holding Berhad gained 5.99% income from their sales. So this comparison shows us that Telekom Malaysia Berhad profit margin on sales is better than Malaysia Airlines Holding Berhad, which indicates Telekom Malaysia Berhad is handling their business better than Malaysia Airlines Holding Berhad. Lastly, for me, second component of profitability ratio, which is return on common shareholders equity. For Telekom Malaysia Berhad return on common shareholders equity, it shows that Telekom Malaysia Berhad gained 29.61% of income from their investment. Next, for Malaysia Airlines Holding Berhad, return on common shareholders equity, it shows that Malaysia Airlines Holding Berhad gained 3.51% of income from their investment. So the comparison shows that Telekom Malaysia Berhad return on shareholders equity is greater than Malaysia Airlines Holding Berhad, which indicates that Telekom Malaysia Berhad is more well employed in shareholder investment to earn income.
Now we will go to debt to asset ratio for Telekom Malaysia Berhad. Okay, total liability is 15042.2 million. We divide by total asset is 23131.3 million. It's equal to 65.03%. That's mean 65.03% of Telekom Malaysia Berhad's total assets are financed by debt. Okay, for Malaysia Airport Holding Berhad's total liability is 12023.7 million, while the total asset is 19450.0 millions. So it's equal to 61.82%. Okay, that means 61.82% of Malaysia Airport Holdings Berhad total assets are financed by debt. Okay, for conclusion is Malaysia Airport Holding Berhad has a slightly lower debt to asset ratio, indicating a potential lower level of financial risk compared to Telekom Malaysia. Okay, next is debt to equity ratio. For Telekom Malaysia Berhad, total debt is equal to 7043.8 million. We'll divide by total shareholder equity is 7936.5 million. It's equal to 88.75%. For every unit of equity, the company has approximately 0.89 units of debt. This indicates a lower reliance on debt financing, reducing financial risk and potential concerns about debt repayment. For Malaysia Airport Holding Berhad, total debt is equal to 4240.726 million. We'll divide by total shareholder equity is 6371.239 million. So the equal is 66.56%. That's mean for every unit of equity, the company has approximately 0.67 units of debt. This indicates a lower reliance on debt financing, which can be viewed positively as it implies a reduced financial risk and potential concern about debt repayment. For the conclusion is Malaysia Airlines Holding Berhad has a lower debt to equity ratio, indicating a more conservative financial approach with less reliance on debt compared to Telekom Malaysia Berhad.
Here are performance improvement suggestions for Telekom Malaysia Berhad and Malaysia Airport Holdings Berhad based on the analysis of their financial ratio. First, Telekom Malaysia Berhad enhance liquidity management. Although TM now has a stronger liquidity position than Malaysia Airport Holding Berhad, it may still do so by increasing its asset through cash management strategy optimization. Second, operational efficiency. To increase profitability and lessen TM's reliance on any one market sector, the company should consider diversifying its revenue stream by growing its current one of investigating new one. Next, diversification of revenue stream to increase profitability and lessen TM's reliance on any one market sector. The company should consider diversifying its revenue stream by growing its current ones of investigating new ones. Next, debits management. YTM debit to equity ratio isn't unduly high to financial sector, may be further stabilized by continuing to use caution by debt management to lessen to the company reliance and one debt financing. Next, Malaysia Airport Holding Berhad. First, improving liquidity position. Its light of the reducing liquidity ratio. MAHB should concentrate and enhance in short-term liquidity through better asset management now or by looking at way to accurate more fast asset. Next, asset utilization. Improving asset turnover can be a major area for development, possibly by making better use of infrastructure and resource to increase sale. Next, profit margin enhancement. Technique to increase profit margin like resource allocation, that is efficiency, cost optimization or revenue improvement may help increase profitability. Next, debt management and capital structure. It may be investigations for long-term stability to continue discussion, approach the debt while looking into the alternative for equity funding, even though the debt to equity ratio is lower. So both companies could also benefit from first technology integration using cutting edge technology to improve customer service and operational effectiveness. Next, strategy partnership. Working with prominent figure in the field or establish strategic partnership may lead to new business prospects. Next, risk management. Creating strong plans to control risk in order to successfully navigate economy up and down and market uncertainty. Telekom Malaysia Berhad and Malaysia Airport Holding Berhad can use the recommendation as a springboard to improve their long-term availability, operational effectiveness, and financial stability. That's all.
So for the summary part, our group have decided that Telekom Malaysia Berhad appears to be in a more favorable financial position compared to Malaysia Airports Holdings Berhad's MAHB. TM demonstrates superior liquidity, efficient asset utilization, higher profitability, and significantly better returns for shareholders. However, the higher level of debt in TM's capital structure warrants careful consideration as it introduces potential financial risk. So that is all from Group 5 and thank you.